Hey everyone, it is Evan here from the Trade Risk on Tuesday, October 8th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So it was a rough day out there. Stocks were down across the board. You can see the major indices were all lower by about 1 to 1.5%, led to the downside by the Russell 2000. 5-day change numbers all in firmly red territory. We're back below the 10 SMA, back below the 50 SMA, still struggling and trying to hold above some of these 200 simple period moving averages. But if we scroll down here to sectors, you can see that everything is in fact everything is in negative territory here over the past 5 days. You can see biotech, utilities, healthcare trying to hold up and try and be some outperformers there, but largely speaking, it's still a drag to the downside. Energy, materials, transports, all facing minus 3% or so losses over the past week of trading. In terms of major markets, we can see volatility up in front here, 7% pop over the past 5 days, followed by silver and gold. And on the downside, we have a USO, which is still struggling to catch a bid. We have S&P 500, and we have high yield credit down there as well on the bottom underperforming list. So let's jump into the charts here. Let's take a look at what went on or what's going on so far this week. We always like to start with a weekly chart of our analysis of the S&P 500. We're looking at the cash market right now, cash settled S&P 500 market, and what we can see so far this week, it is of course only Tuesday, but we are down almost 2% here, and we are falling back into last week's range. Now, when we did our weekend video on Friday last week after the Friday close, we talked about the excitement here in this reversal from last week. The fact that we did get off all the way from that 2850, 2860 zone all the way up to close right into this pocket here, this 2940 to 2950 pocket that we've really had our eye on here. And that's where we've really wanted to see the market hold above to keep it acting as healthy and as bullish as possible after this September breakout. You can see we did get the weekly close above it. And what we sort of talked about in terms of a bullish scenario going forward was to see that area hold, was to see us, perhaps consolidate through time here to start off the week, maybe some type of shallow pullback, but really looking for strength and continued bid above or at this 2940 to 2950 zone. You can see, of course, as we've started off the week, that has not happened whatsoever. We, in fact, had that small gap lower, and we rejected here at this 2950 zone. So resistance is holding in here, and now we find ourselves kind of giving back the exact thing that we did not want to see for the bull case, giving back a good portion of last week's reversal here, this nice wick that you see on the bottom of last week's candle. So when I look at this market here, again, to get that excitement, to get that bullish momentum back in here, we really want to see the market back over 2940 to 2950. That's the way I'm looking at it. Get back above that August range. As it looks right now, as we've kind of retraced and we're kind of in the middle of this range, we need to set our sights and look at last week's lows as a relevant sticking point here, especially given the very loud sort of reversal around this 2855 area. That's where we get to play with now in terms of our lower end support. That sort of coincides with more or less the lower end of the August range as well. Of course, August got down to about 2830 or so, but again, a nice 10-20 point zone here in terms of the lower end of the range where you want to see this market now hold. That's going to be kind of the level that we're going to look at here for the downside. So when I think about this a little bit closer, if I go down to a daily chart, it almost seems like we're going to get sort of a perhaps this little range that we're going to dance around with in here from, call it 29.50 down to 28.60 down to 28.40, somewhere in here, right around where the August lows were, right around where last week's lows are. That's kind of your support down here, or that's where we want to see if support can hopefully hold us to prevent further selling, to prevent a further washout in the market. And on the downside and on the upside, we have this 29.40 to 29.50 zone. So right in here, that pretty much marks maybe where this market's just going to dance around and whip people up, in this kind of choppy sideways range. Again, it doesn't have to unfold like that, but I think if we have those markers, we have those levels in there, that can help sort of guide our decisions going forward. But right now, as we fail at resistance, as we come back down, as we see these 1% plus days and the VIX elevated back up to, let's see where it closed on the session here, so right back almost to 20, we do want to think about protecting ourselves out there. We do want to think about maybe doing less, just managing risk and really kind of focusing on where the risk lies in the positions and strategies that you're implementing out there. So that's really the high level there for the S&P 500. Maybe get ready for some whipsaw back in here in this range, but that seems like the levels that are sort of getting carved out right now until and if one of those levels break to either the upside or downside. Expect that chop to perhaps continue. Now, if we look at the Russell 2000 here, this was definitely the lagging index. We talked about this last week. As exciting or as promising as perhaps last week's reversal in the S&P 500 looked, the Russell 2000 really didn't have too much good to say about it. We were just basically, we did get that pop last week on the Thursday, Friday turnaround, but really it's still occurring at the bottom end of this range. It looks a lot more, kind of vulnerable, sloppy, messy, with no real direction versus, say, the S&P 500 or the Nasdaq. And when we look at it today here, you can see on the weekly chart, it is down about 1.77%. You can see it's much closer to the lower end already here of last week's lows. And then, of course, we have this big area around this 143, which has been, again, the August range and kind of where this market has found some support. So the Russell 2000 continues to be quite lackluster here. No real change of pace there by any stretch. The Nasdaq is what we sort of highlighted last week as the promising case here, which would potentially take the bulls to the promised land if the Qs could continue to kind of firm up, act better, start to break out, start to hold up. That's what we really wanted to see as a potential leadership group. You can see, of course, this got hit just the same today, down 1.5%, filled the gap here from last Friday, and it is on a weekly chart. If we just take a look here, kind of at that, not quite, just about the 50% retrace, I suppose, of last week's range as well. So, when we look at everything collectively here, I think if we want to just try and glean out one type of other bullish scenario, when we look at the, S&P or the Qs or whatever major index you want to look at, if we can muster up a higher low here versus coming all the way back, then maybe that gives, the bulls something to chew on there in the short term. But again, I still think we're in this fairly choppy range here, and you got to be nimble and active if you're going to participate in this short-term action. If you're day trading, fantastic. The volatility is great for that. If you're a little bit above that, then maybe, again, a little more patience makes some sense. So let's get into some other markets now. We got TLT here, which is slightly lower on the week, but not much, just slightly down into last week's range. You can see we're still pretty much holding up near the top end of this trend that has been in place now for a couple of weeks. And we do continue to seem to want to march back up towards the highs back here from August. If we look at gold this week as well, kind of stabilizing, moving sideways here, just very much in a consolidation pattern over the past 2 months or month and a half worth of trading. It is trying to collect itself to perhaps make a move back up to the upper end of the range, but overall it's mostly sideways there for gold. Silver, exactly the same thing, mostly sideways, consolidating here, trying to make a stand, trying to hold up above that recent $16 low, but right now just looks like some classic consolidation in both of those those metals. If we go to energy next, we can see USO here is still struggling, really just hasn't been able to catch a bid. It fell from the sky here as it had that big gap up on Monday, the 16th of September. That pop was basically faded. The gap was filled. We moved all the way to the lower end of this range. And if we zoom out here, you can see we just have a lot of support in here, which is going to be pretty crucial to hold into. This is where a lot of these lows and buyers have sort of stepped in right around this $10.70 level in the USO ETF. We're right above it now, so we're going to need to see if that can hold here for, you know, the fourth time or so for oil. If we look at natural gas, you can see this one also trying to potentially stabilize here after a pretty long slide, consistent slide back down. Had a great wind up here in late August into early September. Then it retraced the bulk of it. You can see a couple of large range, high volume days getting put in. So it looks like in the short term, there wants to be some type of low here, or some type of pivot that is trying to take place. We'll see if that can continue to develop. I'm watching it here as a potential trade opportunity, but no position, no trade setup specifically that I see right there for my style. So that is it. That's what's going on. Lots of volatility, two-way trading, VIX back near 20. You do want to protect yourself, and you just want to be able to have a clear sight on your outstanding risk out there in this type of environment. So that's what I got. Thanks so much, as always, for tuning in and watching every Tuesday and Friday for market recap videos just like this. You can subscribe on our YouTube channel or follow us at The Trade Risk. We'll be back here tomorrow midday for some trade ideas, some swing trade setups in this environment. Thanks so much, and we'll see you in the next video.